I know there's swings and roundabouts in terms of the demand story at this point, where ingredients for things like detergents are in favour, but the auto sector has still been facing a few headwinds at this point. What's the bounce back, given this is about 20% of your sales in the auto sector? Just how strong is the recovery trade that you're witnessing, and that particular sector?
Well, we think that 2021 is going to be a stronger year than 2020 because many of the industries are going to strengthen vis-à-vis 2020. And as far as our company is concerned, please take note, we did perform pretty well in the course of the pandemic crisis with a relatively high resilience. Our margin just dropped by 1 percentage point. And as far as the utilization of our company was concerned, we performed that well with only 70% of utilization. So if utilization now rebounds, volume come back, guess what can happen with the profitability of the company? It will be strong in the course of 2021.
You're calling earnings at between 900 million euros and 1 billion. How would you contextualise these forecasts? How conservative are they at this point, given that there are a lot of challenges still ahead around vaccines and COVID?
Exactly, this is the point, Karen. We are beginning of the year. Normally, we don't guide in a quantitative way as early as this. But we want to give a level of clarity to investors, and for that very reason, we've decided to give a broad range. But COVID is still out there. There are a lot of question marks on other topics like trade wars, Brexit, etc. And therefore, I think you have to be, at the beginning of the year, somewhat humble, somewhat conservative. If things are developing nicely, you can always accelerate, but you have to read our guidance according to this. It should definitely be, performance-wise, a better year than 2020.
Is some of that going to be down to price hikes, Matthias? I look on the website, I can see the announcement you made about raising prices for compounds. Broadly, are you going to be able to push up prices across the board through this year?
Well, definitely rising input costs are going to be a theme not only beginning of the year. My personal assumption, and this is what we are factoring in for 2021, that the entire organization has been pretty rapid in executing price increases. And the good thing is we have pass-through clauses in many of our contracts. The bad thing is they kick in with a certain delay, something like 3 months. And therefore, we will take a hit in Q1, but should then overcompensate, like we've done over the last several years, in the following quarters. So clearly, price inflation needs to be addressed at top management. Otherwise, the organization is waking up too late.
Matthias, I don't want you to be indiscreet, but I'm just wondering what the last thing that Warren Buffett asked you to do with the business, or what he said he'd like you to do with the business. Bear in mind, he's your second largest shareholder, and we're all fascinated by his mindset as well. What does Berkshire Hathaway want you to do next?
Well, we are not conveying details on investor conversation, but what I can tell you, he is fully on board with our strategy. And the strategy all is about acceleration and also not only investing in organic opportunities that we face, like battery chemistry, which is a huge opportunity, digitization, but at the same point in time to participate actively in the industry consolidation. And if you look at how we set the tone beginning of the year, we did 2 small acquisitions just in January, and we have advanced with the second biggest acquisition ever in our company history in February, when we announced the intended acquisition of Emerald's Kalama Chemicals, fitting nicely in our strategic transformation, building up consumer and related industries.